Feeling out the Fed. St. Louis Fed President Jim Bullard out today with comments on the Fed's next moves and why he still sees strength in U.S. banking. Joining us now with more Yahoo Finance's Jennifer Schonberger. Hey, Jennifer.
Good morning, Rochelle. We're starting to hear from Fed officials after that blackout period and the Fed meeting. St. Louis Fed President James Bullard, speaking this morning in St. Louis, says even with the bank failures, the economy is performing well and that inflation remains too high. He says he thinks there's an 80% probability that stress in the banking system abates, and we're actually left with a strong economy that could actually force the Fed to push rates higher. He says while there is financial stress right now in the system, it is nothing compared to the levels seen during the financial crisis or back in the pandemic.
The U.S. banking system remains very strong and very resilient. I would just amplify that if you look at the banking sector by the numbers, it's really in very good shape. So I think, it's something like SVB happens, which is very unanticipated, I think, even by the executives at SVB. And this was not sort of widely known, and it was very sudden. Of course, that's going to create angst and make everybody look at their business plans and make investors reassess, and that's appropriate, and that's what has happened. But I think we have the tools to handle. I think it was a quirky situation, and I also think that we have the tools to handle any fallout from it. So, and I think we've implemented one tool, which is the bank term lending program, which I think will be very successful in handling any immediate problems that occur.
Bullard says he's been talking to banks and they would describe the situation as, quote, angst, but not actual problems at the various banks. He says they're just wondering if deposits are going to be as sticky as previously thought. They're also wondering about disintermediation and whether these deposits are going to continue leaving the banking system to go elsewhere as people are seeking higher yields. He said, as you heard in that SOT, that Silicon Valley Bank was a very special situation, and most banks are not anywhere close to that situation. Bullard said regulators' actions were swift. They were the right action to take in the wake of SVB and Signature's bank failures. He underscored what Treasury Secretary Yellen said, that regulators stand ready to take additional action if needed. Bullard also noted that economic data have been stronger than expected and that we've seen episodes with banks back in the 1980s and 1990s where the economy emerged unscathed. Bullard said that the financial markets reaction here, the fact that we're seeing Treasury yields actually come down a bit, could mitigate some of that stress by offering lower borrowing costs. Rochelle?
And Jennifer, the Treasury Department is saying that it will convene an emergency meeting of the Financial Stability Oversight Council sometime this morning, but is being quiet on the details. What do we know so far?
Rochelle, I don't know if we would characterize that as, quote, an emergency meeting. The advisory we got last night that there is going to be an FSOC meeting this morning. I'm sure regulators right now, we don't have much information on it. We would expect somewhat of a readout later this afternoon. But I would note that it makes sense that regulators are meeting right here on this right now, right? We're seeing still a lot of stress in the markets. You're seeing shares of Deutsche Bank really sell off. People are taking out insurance. You're seeing the swaps prices on that really skyrocket. So there's still a lot of uncertainty, a lot of fear in the markets, and that obviously presents and sets the table for the potential for contagion, even if underlying problems perhaps aren't as bad as what markets fear. Right now, markets are just trying to snuff out all of the weaknesses that could potentially be across the banking system, whether domestically or overseas.
Indeed, certainly investors hoping to get some stability here. We'll see what comes out of that meeting. Jennifer Schonberger, thank you so much.